This is the Junior Mining Showdown Gold edition. So our companies today will be presenting and then followed by 3 questions from our investor judges. So I'd like to welcome our judges first. We have Juan, Alvarez, Angelos, Damaskos, and Charles Hickson. So thanks for joining me today. Okay, and our first company is Edmund Ainscough, Managing Director at Lunnon Metals.
It's my pleasure to present in the Junior Mining Showdown. So we listed in 2021. We listed very much as a nickel company. Very successful. We made a massive nickel discovery, rose to $250 million. We're in one of Australia and the world's great nickel belts, Kambalda. 1.6 million tonnes of nickel metal has been mined at 3% in Kambalda since it was discovered in 1966. It's also one of Australia's great gold belts. It was sold by WMC to Goldfields in 2001. I was the last chief geologist for WMC and the first chief geologist for Goldfields. It got sold with the assets, sold with the furniture. And since that time, the field's gone on to produce 16 million ounces. If it was inside an ASX-listed gold company, it would be one of Australia's great ASX-listed gold companies, but you don't hear anything about it because it sits inside a South African company, Goldfields. We're the only ASX-listed company that owns tenements in that amazing St Ives belt. Now, the nickel price obviously crashed at the end of 2023, beginning of 24. We'd spent all the money we needed to spend on nickel. We turned our mind to the gold. We were very, very blessed that we had the gold rights to our tenement package in that amazing St Ives belt. So it's very much a gold focus currently. We've made a small discovery. We think that will be a price catalyst for a change in our share price, and I'll take you through that in the following slides. The team has nearly 100 years experience. We've all worked for WMC and Goldfields in this belt. I first arrived in Kambalda in 1987 as a fresh-faced POM off the boat, straight out of university here in England. I've been there pretty well ever since, and I've spent a large part of my formative adult professional life in Kambalda. Aaron, my exploration manager, I picked up from the airport in Kalgoorlie in 1996. For his sins, he's been stuck there with me ever since. So really deep experience. We understand the assets, gold and nickel, and the management team has a great deal of local personal capital invested in what we're doing. Goldfields is our major shareholder. They backed their assets into us when we listed in 2021. They own just under 31%. Very tightly held. Unfortunately, it means we're a bit illiquid. But hopefully our new focus on gold and our gold discovery can change that. We've zoomed in here. I won't talk about the nickel. We have 2 projects. The northern project is nickel only. The southern project in gold is shown in some detail on the left-hand image. We're about 600 kilometres inland from Perth, an hour south of the big gold mining town, Kalgoorlie. Amazing infrastructure, amazing logistics, huge workforce. So from that support services point of view, you couldn't have a better address in Australia. And we have 23 square kilometres. So it's quite a modest sized project, but it's all about location, location, location. To our immediate north, 3.5 million ounces of gold at the Victory Defiance complex. To our immediate south, 3.5 million ounces at Argo, Apollo, Hamlet, Athena. There's 7 million ounces on that field of view. That's about a 10 square kilometre image. The middle bit that sits in our ground was a nickel belt. So WMC didn't look for gold in the nickel belt. We're trying to turn that account. We are a hole in a pretty amazing 7 million ounce golden donut, and we think the area has been underexplored. We've made a small discovery, Lady Herrill. That's where it sits. You're looking to the southwest there. The shaft is the head frame is the shaft over the Foster shaft. That goes down 800 metres. I'll show you where that sits in context. As you can see from that image, we're only a short distance off the main haul road. There's essentially no pre-development capital required to take Lady Herrill to account. We're on granted mining tenements. There's no native title here. Our tenements predate native title. This area has been actively mined and explored since the 1960s when it was discovered by WMC. Amazing address you could not want for a better location. And we've put in the last 15 months, we've done 9 kilometres of drilling to prove up Lady Herrill. It's thick, it's high grade, it sticks out of the ground. It's going to be about a 2 gram pit. The importance of that is very low strip ratio. Remember, Goldfields is our major shareholder, and they have a plant just within 4 kilometres of this discovery. That plant's not at capacity. It's a 4.8 million tonne plant. They're only running it at 4 million tonnes. So no pre-development capital required, no processing capital required. There's about 18,000 of that 29,000 ounces that we're pretty confident will fall into an open pit. And we've done that study because we've drilled it so extensively. The goal is to have a robust position to agree the commercial sale of that ore to Goldfields, so that Goldfields are confident that that ore is what we say it is. We've drilled out the grade control already. It's shallow, so we could do that. Those pits bottom out at about 45, 50 metres. The blue colour is the measured resource. We've done so much drilling, we've got this in the highest resource category confidence level. And there's about 18,000 ounces of sitting that in the pit. If you do the maths, 18,000 times $5,000 Australian, that's about $90 million of revenue. And even more amazingly, it only takes 3 or 4 months to mine it. So we've got a great cash backing, and we're going to put a lot more cash in the bank in the ensuing 12 months. That's what it looks like in cross-section. It's pretty thick, as I said. You can see there that the overburden is about the same volume as the ore. It's very amenable. We've done the site test work already. It's about 95% recovery. We've all worked and mined in this district for many, many years. We're very confident that we've got this exactly right, given the amount of drilling we've done. That last slide is in the top left-hand corner of this slide. All of that drilling, you can see the focus on the left-hand side, 9 kilometres of drilling. We've done some scout drilling down the belt, trying to demonstrate that this area is underexplored. We've already got on to 2 more Lady Herial replicas. We think we can maybe actually do one of these every single year, working with our major shareholder Goldfields, and really start to build that cash pile. And at the bottom there you can see the nickel mine, 800 metres down. That drilling was done in the 1970s, 80s and 90s. The drill traces that connect the surface to the deeper mineralisation, that drilling was done in the 1970s and 80s by WMC for nickel. So it wasn't targeted on gold, it wasn't assayed for gold. So essentially we've got a 500 to 600 metre window with no information whatsoever below the drilling we've done recently. So we're finding small things. It's not setting the share price alight. I think people have factored in that cash flow. They can see how much money that pit's going to make. But we're looking for big things. We don't go out looking for small things, but if we find them, we know we can turn them to account, given we're on granted mining tenements. But if you've heard about the famous Father's Day vein discovery by the Canadian company Royal Nickel, and I saw Mark Selby in the hall, they rebadged themselves as Karora. They went from a $40 million company to a 400 million Canadian dollar company in 3 weeks. And 6 years later, Westgold Resources have just bought Karora in August last year for $1.4 billion. Analysts put $1 billion on the value of the Beta Hunt sublease, which you can see on the right-hand image. Their asset, their nickel mine, has a very similar provenance and history to our nickel mine. They were both WMC nickel mines. Both mines, we're finding gold in the hanging wall. There was always gold in the hanging wall at Beta Hunt. What the Canadians did successfully is track those gold structures into the footwall of the nickel. And we're starting to do that at Foster to demonstrate that we've got the same opportunity. So we think we're a low-risk option on gold. We're certainly very confident of finding small things and turning them to account quickly. But we actually offer a zero-cost option on nickel. We've got over 100,000 nickel tonnes in total. 95,000 tonnes of that nickel metal sits on the same property as our gold property. It's at 3%. It's the highest grade, highest quality nickel sulfide in the district. And remembering, just before the nickel crash at the end of 23, Andrew Forrest and Wyloo spent $800 million buying Newcore Resources, the only other nickel sulfide owner in the district, just before the crash. They had 200,000 nickel tonnes, we've got 100,000 nickel tonnes. That's why we got to $250 million market cap. Unfortunately, on the nickel crash, we went all the way back down to 30, 40 million. So we're rebuilding off a low base, but that nickel's still there, that nickel won't rust. Nickel will have its day again. So we're a zero cost option on nickel and an amazing opportunity for gold in one of the world's and Australia's great gold belts. Milestones, turn that to account, get that permitted quickly. It's a slow burn on nickel. We've spent all the money we need to on nickel. Those mines are permitted. Baker is permitted, Foster is permitted. That 95,000 nickel tonnes is, from a regulatory point of view, taken care of. So we're now busy to keep those drill rigs turning. With the confidence of the cash that's coming in, we're just blessed to be in one of Australia's great gold belts, and we want to turn that to account as quickly as possible. Thank you. That's my 10 minutes.
Hi, Edmund. Thank you so much for taking us through these exciting projects on your end. One initial question from my side is, how much do you need? What in terms of your next milestones? What's the sort of expenditure you're looking to spend on the next phase of the project? Take us through some numbers, perhaps.
Yep. Look, we've been quite prudent with our cash. We raised that cash during the nickel, when nickel times are good. So we've been very cautious because our shareholders put that money in at a much higher share price. We're spending about $1.5 million a quarter at the moment because we know the ground so well, because a lot of the drilling is quite shallow. We get a lot of bang for our buck for that $1.5 million. But once we've crystallised the commercial relationship for that discovery with Goldfields, I think we can redouble the effort. We can spend a lot more, a lot quickly, especially if that deep diamond hole in that new space offers the opportunity to give us valid targets. So roughly $1.5 million. We put about 70% of every dollar in the ground. We're a very small team at site and a very small team in Perth.
From my side, the question is, seeing two quite diverse projects within the same company can be confusing for investors, especially when they are at different points in their cycle. How do you intend to move forward with these two projects? Are there any thoughts about spinning out perhaps one of the two, particularly as Goldfields is gold focused, obviously, to your gold project and might be the natural suitor?
Look, yeah, I agree with you. Sometimes analysts can be a bit lazy, so when they have more than one commodity, they don't know what to look at and how to value it. Of all the places on the planet where you could run a dual commodity company, Kambalda, WMC ran a combined gold and nickel business in Kambalda for nearly 40 years very successfully. But that said, like I said, I think a lot of analysts and the broking sector can be a bit negative. We have had some inbound interest on our nickel assets. I see those as green shoots. Given the project size is quite small, I think it will be difficult to split out the two commodities. Like I said, there's a strong belief that nickel won't rust. So in the meantime, while the nickel sector is sorting itself, China, Indonesia, global issues, Trump, etc., with that volatility, we're quite happy being sole gold focused. And maybe we build a cash pile that sets us up to be independent on the nickel front when the nickel market turns.
So you mentioned Goldfields, and it's a great partner. Can you just give us some colour on, like how they came into the company and why they're there?
Look, we as a management team had a strong shared history with Goldfields. Like I said, I got sold with the asset to Goldfields and became one of the senior executives in Australia. They approached us in 2014. I represented some high net worth money that was contrarian. They asked us to put a joint venture to them on the nickel, on our project, because they weren't seeing any value for the nickel. Kambalda is one of the world's great nickel belts. They owned all the nickel rights and they asked us to turn that to account. So we stayed private for 7 years. But we eventually convinced them to make it more liquid, make it more mark-to-market. That was the IPO in 2021. That's where they got their 30% stake from. And we took it at our peak of 250 million through no effort of Goldfields and without a single dollar being put in. We turned their stake into $70 million. So they saw us as a safe pair of hands. We're all ex-residents of Kambalda, Kalgoorlie. They knew that we'd cherish the assets that they'd put into the company. And that relationship has stayed strong, both corporately and operationally since.
And how much is their shareholding now?
They've got 67 million shares for just under 31%. Thank you.
Good afternoon, everyone. Hope everyone's had a pleasant 1-2-1. I'm actually the managing director of Tesoro Gold. Now we're developing a gold project in Chile. Now there's some key ingredients that you need for a gold project. One of them's a good resource, access to infrastructure, power and water, and also a whole heap of exploration upside. And we think, and have so far proven, that El Zorro is able to produce that. El Zorro is an exciting project. It's Chile's first ever intrusive related gold system. So no one's ever looked for these and no one's ever found them before. We looked and we found what is now the El Zorro Gold project that has a 1.5 million ounce discovery on it in its first deposit that's been defined there. And that deposit sticks out of the ground and it's in the foreground of that front slide. The project's about 800 kilometres north of Santiago, super easy to get to, hour in a plane, hour in a car and you're there, in a very mining friendly jurisdiction, not only in Chile but in the region 3 of Chile, which is mining dominated. We've got 570 square kilometres of concessions. A majority of those concessions were acquired through a non-competitive process. There was nothing there. No one was looking for this type of mineralisation previously. And we've defined what is now the Tesoro Gold District. So the equivalent in terms of globally what these things look like is probably the Tintina province in North America. We've got the same sort of stuff happening down at Tesoro as what happens up there, and we're seeing clusters of potential deposits on our ground. So far we've discovered the Jeanneret deposits, 1.5 million ounces, and that's growing. Since that resource of 1.5 million ounces was calculated, we've drilled another 20,000 metres of drilling into it. We're due for a resource update in the not too distant future. And we've got multiple untested targets along a 30 kilometre, very well constrained geological belt now that we have discovered. So like Ed at Lunnon, we've got Goldfields as a major shareholder. And we've had very similar experience. So they've been a very supportive shareholder. People always ask me why Goldfields there, and I think it's because they see the potential not only in the existing deposit to continue to grow to a scale that might be of interest to them, but to understand this new district. They obviously compare it to other districts around the world of similar styles. The deposits tend to cluster, and we've got one, and we've got some very compelling targets outside of the existing deposit that remain untested, but they're certainly there for that. We've also got a very strong institutional support on our register. We just closed the financing about 3 weeks ago, so we've got 11 million cash in the bank right now, so we're well funded to get on with it and advance this project through into the development phase. This shows you why Tesoro's got major advantage over a lot of other projects. We've got access to power and water. Water's always an issue in Chile. There's a desalination plant and a power line 20 kilometres away owned by a company that's on that map with the operating magnetite mine, CAP. CAP own that infrastructure. We've signed MOUs with CAP for access to that water and power, and we're working collaboratively with them to get a financial and technical solution for both of those pieces of infrastructure. Caldera's a port that's only 55 kilometres away. Our team stays in Caldera, so it's an hour's drive up the road, paved road pretty much to our mine gate. And this region, as you can see on that map, is full of operating mines, and it's supported by that regional city down the bottom there, Copiapó. It's got everything you need to explore, develop and operate a mine. So fantastic location to go and build a new gold mine. So far we found Jeanneret. It's 1.5 million ounces there on the bright red dot. But what we've defined is what is now Chile's newest gold district. That's a 30 kilometre long trend, and it's defined by occurrence of a particular type of rock, an intrusive rock, and it's also defined by widespread gold at surface. So this is a big system. There's lots of gold in outcrop through all of that 30 kilometres. We've barely touched it with the drill, except for at Jeanneret, which we drilled over 100,000 metres to define the deposit so far, but a lot of these other targets are yet to be drilled. It's almost inconceivable that there's not going to be another discovery along that trend. And certainly the more work we do, the more bullish we're getting about discovering more gold along that trend. So at Jeanneret itself, as I said, we've drilled over 100,000 metres of drilling, and some examples of some drill results there. Basically what we see at Jeanneret are big wide ore zones with high grade portions within those ore zones. There's some fairly spectacular drill results on that page. Our widest drill intercept to date is 434.6 metres at 1.22. We've had assays up to 924 grams a tonne out of drilling. That map shows all of our drill hole locations in the little dots, and recent extensional drilling shown in the highlights there. But basically what it's demonstrating is more drilling equals more ounces in this deposit. We'll have a resource update out probably in July. We expect a substantial increase in that resource size with that additional drilling. But more importantly, we're firming up some of the classification through the deposit. Our aim is to get at least 1 million ounces of our resource into a reserve that we can put into a production schedule, and we'll update our scoping study and financial metrics on the deposit when we get that resource out, so we'll do it on a new resource. I'll just skip over this one because of time, but this slide, we have done a scoping study on the existing resource. All these numbers are going to change. They're going to get much larger. Obviously, throughput will go up. Gold grade will probably come down a bit due to the gold price. We'll lower our cut-off. But we're aiming to produce, over an initial 8 to 9 year mine life, 110 to 120,000 ounces per annum at a mine throughput of around 3.2 to 3.5 million tonnes per annum. The key parts of the existing scoping study that will remain the same or very similar will be the all-in sustaining cost. We expect that to still come in under $1,200 US an ounce. The metallurgy in this deposit is fantastic. It's some of the best met I've seen in any gold project I've worked on in my career. Coarse grind size, high gravity recovery, so up to 45% in all grade ranges, so even at low grades. And the remainder of the gold leaches beautifully through traditional cyanide technology. So these types of plants are stock standard plant out of the eastern goldfields. Very simple, straightforward to understand and build. We're just finishing off some met work now, which will finalise our flow sheet. And after that, we're pretty well ready to commence detailed engineering and design on a plant for this project. Just on our district scale potential, the more work we do here, the more we understand about it. We obviously have a fantastic proxy in the Tesoro Gold deposit to understand what is required to form additional economic deposits of gold along this belt. And keeping in mind, when we got involved in this project back in 2017, this was completely unknown. Our team have done a fantastic job in delineating the district scale potential here. None of this has been drilled. There's lots of gold at surface. Some of the results like that are outcropping, where we have the right rocks, the right structures, there's plenty of gold. And so we want to get on the ground this year and drill some of these areas as well. We believe that this will have multi-million ounce potential, this project, and we're very close to making another discovery. So current drill program will close out an updated resource, likely to be in July. Off the back of that, updated scoping metrics and obviously higher gold price, larger throughput, larger production profile. This will be a mine. Whether it's us that get to build it or a goldfields will ultimately depend on probably how big it's going to get. And some of that will depend on how big Jeanneret gets and whether we make more discoveries, which we tend on drill testing this year as well. Thanks.
You did the last PEA in 2023, got 1.5 million ounces. Why refresh a PEA as opposed to do a PFS or, get your reserve and progress the project further?
Yeah, a lot of the work that's being done is basically at a phase level anyway. So this will be the last, for example, the met work that we're just finishing off now. We won't need to do any more met work. It'll be final engineering design, straight into feasibility. At the beginning of next year we will start. But what we want to do now is demonstrate to the market what the ultimate scale of this project will be for us at that 3.5 million tonne throughput. The original scoping, given where the gold price is today, the original scoping was done at $1,750 and it only produced 650,000 ounces. We believe the next cut of this at a higher gold price, larger resource, we're going to be somewhere around 1 million to 1.2 million ounces produced. So we need to do some more drilling to firm up some areas of the resource to be able to utilise that in that production profile.
Okay, thanks.
Thank you for the presentation. Very interesting project with many attractive attributes. My question is with regard to your strategy. Obviously, you have about 11 million of cash in treasury. That is quite a finite amount. How do you intend to proceed? What are the next steps? I think the point you made about intrusive related gold systems being clustered focused is obvious, but they can consume a lot of capital if you start trying to identify the next target, and you can use all your capital drilling to find that next target and leaving behind your main project. What is the strategy of that?
Yeah, so we have a fairly strict criteria in terms of selecting a target and preparing it for drilling, and which is part of the reason where we haven't really drill tested many of the targets. We've obviously got a fantastic proxy in Jeanneret, and the more work we've done on that over time, the more we understand the system. So we've gone through all of our targeting, and basically they tick a criteria and they make it to the next stage, because drilling is the most expensive thing that we do. And there's 2 or 3 of those targets, particularly close to Jeanneret, within a 5-kilometre radius, that have met each of those hurdles so far. We've allocated some of that 11 million, around about $2 million of that 11 million, to test district scale targets over the next 6 to 12 months, and the balance of that capital is then being allocated to continuing to grow Jeanneret and advancing it through its technical studies for feasibility.
Just before I start, I'd like to ask the judges for one thing that each of you look for in an investment, key thing you look for, and I'll see if I can incorporate that into the presentation. So, Juan, why don't we start with you?
So from the UK Export Finance side, given we're a debt provider, I think the most interesting thing for us is, a good amount of resources, proven reserves, bankability, that side of things.
Charles?
This is Juan here. So, I mean, I'm a big believer in grade, so and I'm a geologist, so I look at geology, look at grades, and the quality of the resource and the geology.
Perfect. Angelos, how about you?
As far as I'm concerned, I look at the economic viability of the project and how quickly can it be brought into production, and that in relation to the market value of the company.
Okay, you guys are making it easy for me. All right, so let's kick off. So Newcore Gold, we're advancing the Enchi project in Ghana. It is a district scale exploration project that is fundamentally underpinned by very robust economics that we outlined within a PEA last year. That was a big catalyst for the country, or for the company, and we are on a belt that does hold a number of multi-million ounce deposits, as well as very high grade underground mines. In terms of Newcore, our view is that all stakeholders need to benefit from a project, so we are very conscious from an ESG perspective. We do have a team with a proven track record of making investors a lot of money and success. Our founders were behind Newmarket, Calibre, and a number of other companies. Really good capital structure supported by very strong institutional ownership. We currently sit at roughly 55% institutional ownership. We have very good cash position of 17 million in the bank today, as well as 14 million in warrants that are in the money that'll come in the next 10 months, which will take us to cash equivalent of about 30 million. So everything I talk about today is fully funded from the cash we've got. We are based in Ghana, which is a tier 1 jurisdiction to be operating in. It is Africa's largest gold producer. It's important for the economy. It's important for taxes. It also means we have a huge amount of skilled workforce in country. But what we always say is, listen, don't listen to me. I'm a single asset biased CEO, but look at what the major mining companies are doing. You currently have 4 of the top 10 largest gold producers with significant operations in the country. To answer your question, Angelos, let's get into the economics of the project. So the PEA that we put out in 2024, which we're now advancing from PEA to PFS, which will commission in the second half of this year and have published in the first half of next year. The PEA outlined a very simple open pit heap leach operation that produces tremendous economics. In terms of looking at it at a $3,000 gold price, you're looking at it almost $1 billion NPV. That compares to about $100 million market cap US today. 136% IRR, less than a 1-year payback, nice all-in sustaining cost of around $1,100. And one of the things that really drives that is obviously, lower capex to build a heap leach project. You're not building tailings dams, mills, crushers, everything else. In terms of the production profile, as I mentioned, 122,000 ounces. With all of the district scale exploration we've got, we ultimately expect that we will extend the mine life. And then over time, as we prove out the higher grades that we've got underneath the oxide material, I would expect that at some stage we stick a CIL plant in to process that higher grade material and then ultimately take our production profile to maybe 225 to 275,000 ounces. But the project we've outlined with the economics that we've got today justify us fast tracking that into production as quickly as possible, and that's very well supported by our institutional shareholders. The only problem is from a debt financing perspective, we're going to pay you back way too quick, which I know you don't like, so that might be one knock against the project. In terms of cash flow profile, it does create great cash flow. At a $2,350 gold price, you're looking at $855 million of after-tax cash flow. At $3,000 gold, you're producing almost $1.3 billion of after-tax cash flow. Again, this is based on the simple open pit heap leach operation that we've outlined. District scale, high grade exploration will drive it well beyond what we've outlined here. Really simple way to look at it, leverage to gold price. For every $100 move in the gold price, we add roughly after tax US $50 million to the NPV of the project. So we're adding roughly half the market cap of the company today for every $100 move in the gold price. When you get to recent trading ranges, you're looking at $1 billion to $1.1 billion of NPV. The economics are just tremendous. Let's get into, I think Charles, you were talking about exploration, and that's one thing that you look at, and I think we'll cover that in this section here. So Ghana, you've got 2 prolific gold belts. You've got the Ashanti belt, where some of the biggest deposits on the planet have been discovered. You've then got the Sefwi-Bibiani belt. Great neighbors along trend from us, Chirano at 5.5, Bibiani at 6.5 million. You've then got Newmont, one of their 2 producing mines, the Ahafo project, with 20 million ounces and growing. All of our deposits do remain open along strike, so systematically stepping out, chasing these oxides near surface, which will extend the life of the heap leach operation, is something that we will continue to do. We've identified 25 targets across the project to date, of which we've only drilled on 9 of them, and 5 of them make up our resource today. Getting into some of the high-grade opportunity, what we're looking at here is a long section of our Enchi project. We're then comparing it to the Chirano mine. The average vertical depth of the pits that constrains our resource today is only down to about 75 meters. So we've really just scratched the surface, focused on those very profitable oxide transitional ounces that feed our PEA today. Below that, we've got, a very high grade opportunity for us. When you superimpose the depth of that 75 meters on our project and compare it to Chirano, and this would look very similar at Bibiani and Newmont's at Halfo Mine, you can pretty clearly see that where a number of these deposits really grow in size and increase in grade is when you start to get into the higher grade chutes that ultimately feed this system. We've started to drill a few deeper holes onto this project. At Nyam, for example, we've put about 25 or 30 deeper holes. So what we're looking at here is, some of these high-grade chutes that we've ultimately started to identify on our project. You've got the pits there, 75-meter average vertical depth that constrained our resource today. As we started to drill deeper, these are the high grades that you're ultimately looking for. 5.8 grams over 7 meters, 5.6 over 8, 5.4 over 9, 6 over 4. So if our VP of Exploration, Greg Smith, was here, he would start talking about how we've hit one of these high-grade feeder zones that extends at depth. Sitting 500 meters to the south, 3.2 over 9, 7.4 over 8, 3.5 over 9, 6 over 6. So we've hit another one of these high-grade feeder zones that ultimately will extend at depth, similar to what we see to the north of us along trend. When I now pull you back from this and we look at it again from that long view perspective, it's pretty clear to see no drilling to the north, no drilling to the south, limited drilling in between. So opportunity for us to chase this along strike, but also importantly at depth. We're still only down at about 250 to 300 meters. So our goal over time is to prove up that we have a much larger, high-grade mineralized structure that will feed into a CIL plant over time. So maybe just to kind of recap, in terms of catalysts for this year, we are in the midst of a 35,000 meter drill program. We've completed about half of that drilling so far. We've been putting out results on a monthly basis. So between now and the end of the year, expect to continue to see lots of news flow, as well as I mentioned, 17 million in the bank, another 14 million coming in. So as that money comes in, expect to see this drill program get meaningfully expanded. Thank you.
Thank you, Luke, and I think you definitely answered the questions I was looking for. Appreciate it. So you mentioned you're still only halfway through the drilling program. Can you tell us a bit more about how long you're going to continue drilling, what the timeline looks like? And then I think you mentioned, tied to this, there are about 9 out of 25 sites you'd actually hit. Are you going to expand more? Are you going to focus on those 9? Tell us a bit more about that.
Yeah, so I mean, assuming the market doesn't completely roll over and change, our expectation is that we won't ever stop drilling on this project. We're obviously fully funded for the 35,000 meter drill program between now and September. Another 3.5 million will come in from warrants between now and February, so 10 months from now, another $10 million will come in. So all of that cash then will allow us to just continue to expand the overall drill program. I mean, we could drill 1 million meters here and still have opportunities to go after. So what we typically do is, to date, we've drilled 210,000 meters, so we have a very good understanding of the geology across the project, and it's constantly prioritizing what we're drilling next. So we'll go into an area, put 20 odd holes in, depending on what the results are, we'll then dictate what follow-up drilling we do. If you look at our last press release, we hit 2.25 grams over 56 meters. That was the deepest hole on that section. Within it, we had 4 grams over 15 meters. So needless to say, that has gone up in terms of a priority area for us to ultimately chase. In terms of some of those additional targets, Enchi, Nyam, Sium South, Naquanta, these are areas where historically we drilled, say, 2,000 to 5,000 meters. Made discoveries, but haven't got the drill density to ultimately wrap resources around that. So those will be areas we go back to. And then obviously this high-grade opportunity at depth is something we're very keen to follow up on. But one of the key things is because of that 200,000 meters of drilling that we've done so far, we have a very good understanding of the plumbing that ultimately feeds this. So we're not, taking shots in the dark. We're systematically following up on these high-grade shoots that we've already identified, which from a risk-return perspective, we think is much better for investors.
Thank you, Luke. Can I ask, obviously you have focused on the shallow transitional material, the oxides, so far that justify a relatively low cost, low startup cost heap leach operation. How long would it take you to understand better the impact of the higher grade, deeper material and see whether the transition to a CIL plant makes sense and how much it will cost, how much it would affect the economics?
Yeah, so if we look at the economics of the heap leach project, it makes sense for us to put that in regardless. If we weren't to find one more ounce on the project, I mean, $1.3 billion of after-tax cash flow speaks for itself. So our major institutional investors are very supportive of us fast-tracking that to production as quickly as we can. Layered on top of that, with all of this district-scale exploration we've got, and it's not all underground. I mean, at the bottom of some of these pits, we're already starting to see this fresh material. As we drill it out and grow it, more will come into the pit. But as we, let's say, grow it to 2 to 3 million ounces of fresh sulfide material, at that stage, it will start to make sense for us to look at, putting a plant in, let's say, years 4 or 5 of our heap leach operation. You stick a plant in at that stage, which is fully funded from the cash flow that we outlined here. Again, sorry, we won't need to come back for more debt, so you're going to be disappointed again, Charles. But fully funded from the cash flow, you can start to look at that CIL scenario. We won't stop heap leaching. You keep growing that and extending mine life. You layer a CIL operation on that. On top of that, you've now had a step change taking you from, let's say, 125 to 250,000 ounces, all fully funded from cash flow. So that's the approach we're taking. And one of the things we obviously like is that we can fully fund it with the cash we've got today and then the cash flow that's produced from the operations.
Thank you. And thank you for everybody for sticking around here. And to my, there's a last presentation on the last day, so thank you very much. Pasofino Gold, this is a unique, special situation, both corporately and financially. We have over 2,000 square kilometers of land package with only 8% of our land we have explored so far. But I say special situation because this is not an exploration company. This is an advanced stage development company. In November of 2022, a feasibility study was done on this resource. We have 3.9 million ounces, including 2.7 million ounces of reserves. And we have a full bankable feasibility study done in November of 2022. But we're still trading at $14 an ounce. So if I look at historical norms of valuations, Pasofino should be valued at $500 million. When 10, 15 years ago when I was in the gold business, we were getting $180 an ounce for reserves. We were getting $80 an ounce for measured and indicated, and we were getting $30 for inferred. And you do the math, and that's a $500 million company. So the potential here, to my original statement, to make money, this is an opportunity to make money. The other corporate unique situation we have, the special situation we have, is this asset originally was developed by Hummingbird Resources, and it's been around for 15 years. They've drilled 150,000 meters of drilling, and Hummingbird went through a transition in November of 2024, and they were bought by a bank, and a West African bank called Chorus, and their private equity vehicles called Newcore Resources, and they are now our new strategic partner. So very early on in 2025, I met with them, and I wanted to make sure that my strategic shareholder was aligned in what we wanted to do. And that is, A, to make money, B, to be aligned in how we're going to make money, and C, look at how we can continue to make money for a long period of time. So we entered into a cooperation support agreement with them, and we are now in the midst of raising money so that we can advance our aligned strategy. The strategy is we have collective control of the board. We have a funding agreement in place where they are going to participate pro rata all the way up to project financing. And we have a standstill agreement where I can't sell the company and my strategic shareholder can't buy the company for 2 years. So I'm currently raising money. We have an offering out right now for $5 million. And we're raising at 50 cents with a half warrant at 75 cents. But the jurisdiction we are in is one of the best. And those who you know me, I've been in Africa for well over 25 years. I've built 4 gold mines, 1 copper mine in very, very difficult jurisdictions. 2 mines in the DRC, 1 in Sierra Leone, 1 in Mali, and 1 in Burkina Faso. And I can assure you, Liberia is one of the best jurisdictions in Africa. And I've been spending a lot of time there in the last 6 months. And quite frankly, it has a large U.S. embassy, a large U.S. presence. They trade in U.S. dollars, and the people speak English, which makes it easy for me. So it is a tremendous jurisdiction. But we have a large project. This is a project that has tremendous economics on the feasibility study that was done in November of 2022. So if I look at jumping forward, the CapEx for this project is $435 million. And you're going to say, well, that's going to be very difficult to do if you're a 50 million market cap company. But keep in mind, my strategic shareholder is a bank, and their number one objective is to build this mine. So I am going to tell this story throughout the remainder of this year in parallel to updating the feasibility study. If you look at the feasibility study numbers that came out when we did it on $1,700 gold, $435 capex, $1,005 US dollar all-in sustaining costs. This has a $500 million post-tax NPV and a 23% IRR. And that's by putting 5 million tons through the plant and 171,000 ounces of gold for 14 years. And it's front-end loaded. There's 5 years. The front 5 years are all over 200,000 ounces. But let's fast forward. The last 12 months, the gold price has done this. And we are going to update the feasibility study on a number of things. Obviously, the gold price. We are going to use different input assumptions for our model on gold price. We are going to remodel the resource on a higher gold price, higher constraints on the pit shells because they were modeled at 1,600. I'm going to redo the mine plan. We're going to update the CapEx. We're going to update the OpEx. And we are going to do some met test work to bring this number up a little higher, closer to 90%. But the economics today, if I use $2,700 gold, this has a post-tax NPV of $1.67 billion. And the CapEx remains at $435 million. So it has a 4-to-1 ratio of NPV to CapEx and a 54% IRR. I think you'll be hard-pressed to find projects that are that robust in such great jurisdictions. So we're going to go through this feasibility study optimization over the next 7 months. In parallel, we're going to be filing our ESIA to the government and the EPA of Liberia. It's done, and the clock starts ticking when we submit it, so we're going to wait until September to submit it because I want to send the updated feasibility study and our NI 43-101 to the mining minister by the end of the year, and he has 90 days to approve it in order for us to get our Class A mining license. So it's realistic to think that within 7 months, we'll have every facet de-risked to make a construction decision. So late this year, I will be looking at how we finance this, and I might have to be very creative. Mind you, I have a bank as a strategic shareholder, but I may have to be very creative in how I finance this. But there's a ton of optimization potential when we redo this study. So the economics are going to be better than the way I showed them that it's gold price sensitized on the old study. These economics are going to be stellar. So there's a number of areas we're focused on. We are planning on doing a lot of pre-construction activity late this year. Out of the $435 million, $35 million of that is about building roads, bridges, and rehabilitating our port, and also contributing $8 million as part of our community development contribution to start a timber business in and around our site for our host communities. Part of our ESG strategy is getting sustainable programs in place for our host communities. We will capitalize, and then we will buy the timber from them. We will buy the lumber from them, and any excess they can ship to their profit. We will help them with that business. We will have an expat start them off and to run it, but these are all the types of sustainable ideas that we are thinking about for our host communities. But hey, you can see where gold has been, and you can see where the headlines say gold's going to go. But this is what we've done. And why have we done this, our share price? Because of the distress our former parent company in Hummingbird went through its transition to be acquired by the bank. But we are on our way up right now. And quite frankly, when you look at transitioning from $14 an ounce to multiples of cash flow, it's not too difficult to see this can be a billion-dollar company in 24, 36 months. And we're a $50 million company today. So when I say I'm here to show you how to make money, guys who were talking today about 10 baggers, I've just showed you a 20 bagger, and that's not unrealistic. Again, one of the greatest mining jurisdictions in Africa, in my view. We only have 6 operating mines in Liberia, so it's very underexplored. We think that we can continue to put $20 million into this project every year with resource development drilling and continue to get this to the next level, which is 200,000 ounces every year for a generation. This is our newly constituted board. And the activities over the next 12, 18, 36 months until first gold. And I don't think you hear that from exploration companies. So we're here because we have ticked these boxes. People, we have size, scale, jurisdiction. We have good grade and metallurgy, tremendous project economics, and lots of blue sky potential. So when I say we're here to make money, this is Pasofino Gold. So thank you for your time.
I'll kick off. So, 1.3 gram per ton reserve, pretty skinny. Is there like a high-grade starter pit or something that will lift the grade of the mining in the first couple of years?
Yep. So what we are planning to do this summer, we're going to do a 3,000-meter program to test the oxide surface. We're only going down 60 to 100 meters. We want to test the oxides in and around Tuzon and Dugbe, our 2 pits, where our reserves are, and near mine site, to see if we can bring in some oxides into the mine plan, which will sequence early in the mine plan. Our oxides carry 3 to 7 grams, so yes, it will increase the grade. It's not 1.3 grams is doable. It's skinny. It's right on the median of probably within West Africa, but it's easy to liberate. And the volumes we put through at 5 million tons a year are about 15,000 ton a day. The economics are quite good. Yes, we have to move a lot. The strip ratio is 4 to 1. We have to move a lot of dirt, but it's captured within our operating costs. It's captured within our CapEx. So it's doable, but there's no, can we do this for 100 million? Can we do this for 150 million? We can't. This is a complete step forward, and we have to make that commitment. And I have to find a way how we're going to finance it in a way that is as non-dilutive as possible. And by having a bank as a strategic partner, that really helps, because we can service our debt and repay our debt within 1 year for full commercial production on a generational mine, at least 14 years, as you've seen. So I'll be worried about it later. I'm not too worried about it now. The bank is saying, we fully support you, so I'm quite happy with that.
Can I understand a bit better the relationship with your strategic shareholder? Obviously, Hummingbird effectively went bust and was taken over by their bankers, their creditors. Now, having a creditor as a majority shareholder, a banker rather, will be thinking differently to an equity investor. How do you ensure that the shareholders' interests as equity investors are served?
It's a great question. It's why we signed a cooperation and support agreement with them. So they are committed to the funding on equity through to construction. They're committed on the equity on the project financing. They're committed on half of the debt of project financing. Now that's a soft commitment, but they've given it to us. as far as how we create value for the minorities and how do we prevent them from, oppressing the minorities, we have a standstill agreement. And they can't buy us, we can't sell them, and I have a shareholder rights plan that if I need to invoke it due to oppression, then I buy myself time and runway in order to bring in a white knight. That's the purpose of them at the end of the day. But my job is to get this story out there because the bank has told me that they want to use this to build a gold company. They have 2 operating mines, Yanfalila and Carusa, in Mali and Guinea, respectively. And they want to buy other mines. They want to build other mines elsewhere. And what I've said to them is, this is the cash engine to do it. My strategy is to get this into production and distribute. I don't want to build, I've run multi-mine gold companies. I want to distribute back to shareholders. So in year 3, once the debt's paid, I want to distribute that free cash flow back to shareholders. They're going to get $200 million of that every year. So they're saying, yeah, I get that, and we can use that and deploy that, but don't use Pasofino as the vehicle. Use Pasofino as the cash engine, and you can deploy that capital wherever you want. With distribution. I don't, like I say, I want to keep this mine for as long as possible. It works, it sensitizes down to $1,600 gold. Don't think we're going down that low, but this is just a cash flow engine. And sooner or later, we're going to have to trade on that.
Can I quickly follow up on one thing you just mentioned, Brett, around the other mines that the bank also held? What sort of size mine? Are they comparable sizes to this 400 million costed project? Are they smaller?
So the bank has around $2 billion of capitalization, and they have branches in every Francophone West African country. They hold debt, project financing on Carusa. They hold project financing on 3 other mines in West Africa. They hold equity positions in companies like Orezone in Burkina Faso. They hold 19.9. And they also have working capital lines with some of those. But they also fund downstream. They do mining contractors. They do drilling contractors. They do labs. They actually loan into our sector into almost vertical integration. So this is a reasonable size investment for them, and probably under the radar, like under their median. But there will come a point in time when it's not. If we can create the value that I talk about, then absolutely, yeah, they'll use this as their vehicle to fund other stuff. Thank you.
Thanks, Brett. Okay, if I can now ask our judges to decide amongst yourself for 1 minute who our winner is. And if you could please take to our stage to announce our winner. Thank you.
So we have a winner, which is Newcore. And the key reasons, put my glasses on, otherwise I can't see. They have good cash position, which allows them to continue their development. I mean, it's obviously a great jurisdiction. The PEA, which came out, just had some really fantastic returns. And we like the staging of the asset. So, with the oxide start and then lots of upside in the sulfide project.
Thanks a lot. You win a
Can I get a picture